county of Worcestershire really is a fabulous place to live. From the vibrant cathedral city of Worcester to the wonderful lifestyle of countryside living at its very best. At RJ Country Homes, we specialise in selling village and country properties across this glorious county. And, together with property industry experts, we will be giving you some top tips and expert advice about moving home and guiding you along the way. Sukhi, thank you so much for joining us. We've discussed lots to do with mortgages, and now we're going to focus purely on buy-to-lets.
Yep.
Let's talk about the application. What's the difference between a buy-to-let mortgage and the application for a residential mortgage?
Okay, so there is a different application process. There's different regulation around it, whether it's a regulated buy-to-let or a non-regulated buy-to-let. Obviously, you don't want to get too confusing for buyers. So from a buyer's perspective, you do still need the same information that you would present at a residential application. But the criteria and the affordability is worked out differently for buy-to-let. It's stress tested against the value of the property and the rental income that you would potentially receive, and that determines the affordability. So if that proves slightly under what you are wanting to borrow, some lenders take into consideration your own income as well to top that up. Not all lenders do that, but some lenders do that as well in order to achieve the amount you want to borrow.
And what about deposits? Because it's a much bigger deposit for buy-to-lets.
Yeah, good question. Yeah, so for buy-to-lets, it's a minimum of 25% that you need to put down for a buy-to-let mortgage. And then the rest is calculated off that affordability, which again is a stress testing against the property value and the income, the rental income it would achieve.
Okay, and for anybody that perhaps might be new today and you're looking at doing your first buy-to-let, and it's mindful, isn't it? You just don't know where to start. Mm-hmm. We've obviously looked at deposits. You've got your interest only and then your capital repayment. So what are the differences? So
capital and repayment is where you're paying an element of the interest and an element of the capital. So at the end of the mortgage term, the 25 years or 30 years, whatever term it is, there's a nil balance. Interest only is where you're paying the interest only element only for the term of the mortgage or for that product. And then when that comes to an end, you've still got the actual outstanding balance to pay. So if you are taking an interest-only mortgage, you need to provide evidence or have a plan to the lender, show the lender that you've got a plan to make that balance clear.
Okay, and what do most people go for, the interest only or the capital repayment?
For a residential, then it's going to more than likely it's a capital and repayment, because you want to know you've got a nil balance at the end of the mortgage term. For a buy-to-let, it's more common to have an interest only. Clients use the rental income to pay off the interest only element, and then it's up to the client themselves how they want to repay the balance at the end. Lots of clients want to either sell the property, that's a suitable repayment vehicle that the lenders will accept, or they might have other investments that they would cash in order to pay the outstanding balance.
And what about rental yields for those, again, that might be looking at working out their rental yield? How do you go about that?
So there's actually lots of online calculators that you can use to work out, and it's a simple calculator. Again, it's stress tested against the property value and the amount you would expect to receive as rental income, and then it will generate what your yield potentially would be. But if you need help, obviously contact your broker as well. They would be able to help you and guide you through that information.
Okay, and if you're looking to have a property portfolio, we hear of a lot of very savvy buy-to-let investors that they will maybe do up a property and then they'll release some of the funds to create the deposit. How does all of that work?
Yeah, that's doable, definitely doable. Lots of clients like to, exactly like you've said, do a property up, rent it out, and then release funds from that property or further borrow against that property in order to have a deposit for the next property and then go on and on. So that is certainly doable. Again, the main calculator with buy-to-lets is the rental income that would be received and against the value of the property. And when further borrowing, there'll be, against a buy-to-let property, there'll be certain limits you can go. It won't go past 75% loan to value, as long as there's always 25% deposit. in the property. And also, if it doesn't reach that, well, as we said earlier, some lenders sometimes use your actual income, your employed income or self-employed income, to help increase the amount of borrowing.
And what about you're looking to get a buy-to-let on a property that is a big renovation project? Is there a lender that would work, or are they best to avoid?
Yeah, so some lenders will put a retention on the property, meaning like the work needs to be carried out before the funds are released. Other lenders, or most lenders, will lend on the property based on the actual status of the property at the time of the valuation. But as long as it's got a usable kitchen and bathroom, and and a valuation is passed on it, they would. The affordability would be determined by what the value of the property is at that time of valuation. Some clients think that, well, I'll buy it at, I don't know, X amount, but in the future it's going to be worth twice that. But the lenders don't look at it from that perspective. They'll take the affordability based on what it's valued at the time of application.
And are they strict in terms of, well, it can only be rented out when you've done X, Y, and Z, so they'll still loan, but you've got to get those things fulfilled?
Yeah.
Quite honest of exactly what needs to be
Yeah,
done.
absolutely. So if it's something structural that needs doing, that's detrimental to the property and somebody living there, and then of course if you were going to rent it out, you've got your own checks to do via the agent. They'll need to have that checked out that it's suitable for rental as well. But from a lender point of view, as long as it's structurally safe and they're happy with the valuation. They'll be happy to proceed, but they'll value it at what it's worth at the time of that valuation, not, in a few years it'll be worth this much because you're expected to do this amount of work on it. So it's a bit of a difficult one. But.
And finally, your top 3 tips.
Oh.
Top 3 tips on what you would recommend to anyone that's looking to do a buy-to-let. What are your top 3 tips to help?
Oh, okay. So research your area. I would say research your area and see to find out what rental income you would receive, and if you think that's suitable for how much the property is and what your deposit is. Always have your finances in place. You need 3 months proof of deposit straight away. It's the same information that you would need to provide, the same information that you would for a residential. So you still need your 3 months bank statements, your 3 months pay slips, your 3 months proof of deposit. Have all that in place.
Okay. So we've got location, finance, third top tip.
I think a lot of clients are aware that this is just a buy-to-let property. It's an investment property. You're not going to live there, so it doesn't matter so much about the decor and so on. It is an investment property, so just ensure that the figures stack up and that you're happy with that. Your finances are in place, so there's no problem with the application. And obviously that the property is good to go and ready for you to start renting it out.
So go with your head and not your heart.
With residentials, it's more so your heart, absolutely.
With your head instead. So great tips, and thank you so much for joining us today. It's been lovely to see you.
Thank you.